Hey folks, well, I have some interesting news to share. Of course, if you've been following the markets, you probably figured that my Google challenge has taken a turn. So let me explain what happened last week. This was a Monday, and I basically sold some puts at 109 and a call at 116, thinking that Alphabet shares would continue its trend upwards and it would respect this long-standing pink channel that I have drawn out here. But here's what happened after I placed those trades last Monday. Alphabet basically dropped the very next day and it continued falling all the way to 102 by the end of the week. So my 116 calls were out of the money, expiring worthless like I wanted. However, I had two put options that I was short and they were very deep in the money. If Google is down at 102 and my strike price is 109, then that means the difference between that, which is 7, you can times 100. That's basically a $700 loss per contract minus the premiums that I made from it. So this is what it looks like on paper, my profit and loss. Before last week, I had $2,500 in profit that was unrealized. And then after the huge drop from the stock market, I was basically down $1,200. So now I am still making a gain. We're on week 9 here, just finished. But you can see I have dropped a lot, this blue line here. And I'm actually, for the first time, below the threshold that I need to average in order to get to my goal of making $10,000 in 1 year using $20,000. So first, I'm going to talk about what I did last week to reduce my losses as much as I could anyway. And then we'll look at what I'm going to do this week. So I had two put options at 109 that were both expiring in the money. So I basically rolled forward and down. So I recorded my transaction on Friday. So let's jump over to that and I'll explain there in further detail. Hey folks, it's Friday the 16th. What I'm going to do is roll out one of my positions till next week and I'm going to let the other one basically get filled at 109. So there's about 40 minutes left. So I'll go ahead and put in that trade before the option expires. Here's what my account looked like. Here is my Google strategy for this week. As you can see, the 116 call, that's basically worthless. The market value is 0 and the 109 is in the money. So overall, my strategy is down $1,000 here, as you can see, but that's if I don't do anything right now. My actualized loss will not be that bad, but it'll still be the worst week I've had since I started this challenge. So to roll this forward, all I'm going to do is close this position and open a new one for next week, probably at a lower strike price. And there's a couple ways I can do that. I can right click on this option here and go roll. Because I sold this option before, now it's automatically putting in a buy order for me at the 109 strike. You can see I have to buy it for $610. So the point of rolling it is I can offset some of this cost. So I'm probably going to go with the 104, which is a little bit higher than today's strike of 103. That's one way to do it, and it will just execute as one trade. Another way is I can manually close this and open another option for next week. So I can right click on this put and go to close. And while that's waiting to be filled, I'm going to go ahead and look at the option chain for Google and go to next week, which is September 23rd. So I'll click on the sell and that's going to put it up here. And for this one, I want to have a larger number because I'm selling this, so I'm going to make money from it, and also just one quantity and submit. So I'm basically buying the 109 option back because I sold it on Monday, and I'm opening a new trade, which is selling the 104. So I'll choose 625 and update. This one looks like it
Order
might
filled.
fill pretty soon. Okay, so the 625 filled. That's the put I bought back, and then this one is the new put. It's just hovering around there. It's very close to getting
Order
filled.
filled.
There we go. So that's how you do a roll. So that is a minus roughly $350 out of my pocket, but it's better than just closing it at 625 or taking ownership of the stock and losing about $600. So after the markets close today on Monday the 19th, I'm going to give another update. So let's jump over to Monday next week and get a full summary of how much money I lost for this week and also what new options I'm going to put on. Okay, welcome back to Monday. With all of the buys and sells of options last week, I ended up with a net premium of minus $164. So unfortunately, I did take a loss here, but it wasn't as bad as it could have been. And because I let one option expire in the money and get exercised, I had to buy 100 shares at $109, which is my strike price. What that means is my total capital used is now about $8,500. So I still have about $12,500 left out of my $20,000 available capital that I can use. And the reason it's not higher is because interactive brokers will loan you 70% of the stock's value. So I'm basically just using that calculation here. And this is the update on my Alphabet stock portfolio. Instead of 100, I now own 200 shares. This is for week 9. So if we take the total income I've earned in options over the last 9 weeks, and subtract the paper loss from the stock. In Canadian dollars, I'm left with 13.15, which brings us to this week's overall progress. So hopefully I can make up some of that loss this week. So when Alphabet falls, it's kind of a good thing in a way because the implied volatility is probably going to be higher, which means the premiums are going to be better. So I'm going to get rid of this upward channel because it's basically not in play anymore. And I'll just move these out of the way first. So looking at the chart, this is looking at Alphabet's 1 day chart. We don't really have any support down here because as you see here, this wick was a previous support that was around the 101 level. It looks like we've broken through that. And the stock got down last week to as low as it looks like 184 roughly. So to find previous support, I have to look all the way back to 2021, and we do see that there are some price action over here that could be useful. So I'm going to put a line right at the bottom of this, which signals support, and that's basically around the $100 level. In some way, this breaking out was kind of expected because here we do see a bear flag pattern, and that's just when a stock goes down a lot, and then it trades in a channel, and sooner or later the stock will pop out from the bottom, and then so it's called a bear flag because this kind of looks like a flag. And then when it drops out from the bottom, you would expect it to continue falling until it reaches some other kind of support. So typically we would call this large drawdown here the pull, and then the slanted sideways action the flag, and then usually it goes back down. So basically what happened was in here in this channel, buyers and sellers were playing this buy and sell game where when we got down to the bottom, buyers jumped in, and then over here they sold, and then that's when sellers took control and pushed the price down. And when everybody realized that the sellers got exhausted here and they can't push it down further, that's when buyers jumped back in, and that's going to push the stock price back up. So they did that for quite a while, back and forth, until over here, where sellers came in strong after that CPI data, and there were no buyers here to stop them. So that's when it pushed through. And a lot of these buyers who went in here and here and here, they basically got flushed out because they had a stop loss maybe around here. So once that candle went down and we had a couple more days down, the buyers that got in over here, they basically sold to cut their losses before things got really bad for them. And so when they sold, plus you have continued pressure from sellers, the stock price just continued to drop. So before we were trading sort of in this higher range, let's say from about 105 to like 122. But now, because the sellers have won, we are trading at a lower range now. So the channel for that would be something, so basically from around this point to about this point 105 level. You can see in 2021, looks like this was between February and April. There was some price action here, and it's sort of the same thing. Buyers and sellers were fighting each other, pushing the stock up and down, but it did stay within this channel, which means whenever the stock peaked up above this 105 level, it got too expensive, and the buyer said, okay, I'm just going to take some profits here. And that's when sellers came in. And because the sellers couldn't push it past this 100 mark, which is a very strong support, it means buyers can come in and push the stock back up because for whatever reason, sellers got exhausted every time the stock came back to that $100 level. So going back here to today, I think that's the new trading range that we're going to be in. So I'm going to get rid of this. And what this means is there are two scenarios that can happen over the next week. So this is going to be pretty exciting because we are going to come down to this $100 support line, and we're either going to get a bounce back up to at least 105, if not higher, or if the selling pressure is really strong, we're going to go right through it and we're going to go to maybe down to around 89 or $90, somewhere down there, because if we look in the past, there's kind of no support over here. There's not a lot of price action. So the next level of support would actually be here, where the buyers would be more comfortable coming back in. And if that gets broken, then we're looking at around $85 for Alphabet, at least in the short term. So what this means is I'm going to be looking very carefully at what the price action of the stock will do in this week, because it could go either way. I'm not confident that it's going to bounce off this 100 or go through. So I don't want to put in any big bets right now. I do already have a put expiring this week, a short put at 104. And if that gets filled, then that's good, because then I would basically be averaging down. Now, due to the fact that we have this channel in play, which is going down, I'll just make this one red. What this tells me is that there is a higher chance that Alphabet will continue to fall. Even if it does bounce off of this $100 line, this purple line here, it's going to be very difficult for the price to continue moving upwards, because first of all, you have this channel in play, which doesn't look like it's going to get broken anytime soon. But even if we do bounce off this $100 line and come back up, and we get past this red downward sloping channel, we still have to contend with the fact that we're still in this yellow channel here, which is between roughly 105 and 100. And even if we get past that, we still have to deal with the EMA, which is coming down. Looks like it's going to come around somewhere between 109 and 105. So that is a lot of resistance to try and climb back up. Very low probability that that's going to happen, which means for this week's options, I'm going to be selling calls, and probably call spreads, because that'll give me a larger potential premium. And I just released a video on how to do bear call spreads. So that's basically what this is. So let's take a look at the option chain for Alphabet and see what we can do here. So I'm looking at September 23rd expiration. I already have a 104 short put that I'm probably just going to leave. I'm tempted to sell another put at 99. That's pretty good premium right there, around $77. But if we get a 1% interest rate hike from the Fed this Wednesday, then Alphabet could very easily fall right through the $100 support and go down to like 96 or 95. So instead of having a put at 99, I'm going to play it a little bit safe and sell the put at the 95 strike. So once this is done, then I will have two puts. So let me put this one in first. I'll say 24 cents. Margin impact $3,000. Okay, so I'll make about 30 Canadian dollars from that probably.
Order filled.
My put has been filled at 24 cents. And looking at the call side, I will be doing a bear call spread. And I'm choosing 108 because my average cost right now is 108.5. So if I sell it at 108, it will at least be like break even for me. So it won't be too bad. And then maybe I'll buy the 110 strike for protection. So not much, 10 cents per contract. I'll have 4 contracts here.
Order partially filled. Order filled.
Okay, that one filled. We have the $95 put, and then the 108, 110 bear call spreads. So we'll have to wait until next week, which I think will be more exciting because we'll have a better idea of which direction Alphabet is going. Thanks a lot for watching, and until next time.